Hi, this is Zak Mir, editor of Spreadbet Magazine. We'll look at some Bulletin board hero stocks on Friday, December the 5th. I'm starting off with Alba Mineral Resources, where it looks as though at long last we've got the chance of an intermediate recovery. The overall pattern here is of a gap fill from July, a gap fill rebound towards 0.25 pence. And really that would be the stop loss on the buy argument or the recovery argument as we await a rebound. Initial target, obviously, the 200-day moving average, 0.53 pence, and former November resistance towards 0.7 pence over the next 2 to 4 weeks. A possibility after that. End of day close stop loss, 0.25 pence, which was the November floor. And we can also see that there's been extended support here along an October RSI support line, which should drive the share price over and above what we've seen as an initial Thursday rebound for the shares. Next up is a situation which we've been following for quite some time. Really, it looks like we're in a mid-move consolidation after the very strong price action for November. That was a rebound or bounce off the 200-day moving average, 4.15 pence shown here in black. Unfilled gap through the 50 and 20-day moving averages, and then this near vertical move that we've seen in recent weeks. This looks like a bull flag consolidation, a mid-move consolidation for the shares above previous resistance towards the 6 to 7 pence zone. The view at the moment is that while there's no end of day close back below 8 pence, the 10-day moving average zone, we should expect further significant upside. Favoured destination at this point towards 16 pence, which would be which is the top of a rising trend channel from the middle of 2013. Stock which has been focused in terms of the volume yesterday was ECR Minerals. Quite a sort of sharp spike here for the shares at the floor of this, or off the floor of this rising trend channel from the summer of last year. That's towards the 0.15 level. We've seen double support, triple support for the shares around there, with this rising RSI uptrend line as well, backing the idea that there could be a recovery. Cautious on the shares, maybe to wait for a weekly close above the 200-day moving average at 0.22 pence, or even this resistance line from May up to a quarter of a penny. But does look as though enough work has been done by the bulls to get this stock back on track for the upside, especially as we had the end of day close yesterday back above former 0.2 pence support, which had been in place earlier in 2014 in February and also in April. Upside here as high as 0.55 pence over the next 1 to 2 months, or 1 to 2 months at least, after we break through this initial quarter penny zone resistance. Finishing off with a stock which has a similar charting profile, I think, to Amur Minerals, and that's Paragon Diamonds. We've had the big breakout or big recovery for the shares over the course of November, with the aftermath of a bear trap from below 3 pence. The overall trajectory here is within a rising trend channel from the summer of 2013. We look to be sort of halfway into the move to the upside here. Target would be 9 pence, really, while we remain above this former sort of or pre-summer resistance towards 5 pence. Also ties in with the current position of the 20-day moving average of 4.69 pence. So really another 3 or 4 pence to go on the upside while the 5 pence zone is held. That's it from me. More updates at spreadbetmagazine.com.